Wednesday to you. Welcome back to the live trading room. How's everyone doing today? We got a Fed day on our hands, which means we have an interest rate decision coming later today, which means I don't really have too much interest in the market. I didn't do any pre-market analysis this morning. Today's a stay away day for me. So as far as the trade of the day, let me know if there's any place in particular you guys want it to go to. If not, I'll find something. And we are going to go around and scroll through the markets no matter what, regardless. But from what I've learned in past experiences, because I have no interest in trading before a news event like this, I spend my time wisely doing other things. And here's the question I always get for traders that are maybe new to kind of the markets and understanding these major news events. And they'll typically see something where they see a news event that has an effect on the dollar, and they'll say, well, Akil, I'll just look at some pairs that aren't dollar crosses. And we have to remember that the Forex markets in general, but specifically the Forex market, there's always this ripple effect, right? Everything affects something else. Money typically never is taken out of the market. It is just shifted around. So when news comes out for the dollar, it may affect the yen, right? News comes out for the yen, it may affect the pound, right? And so forth and so on. So we never know what that trickle down effect is going to be. And I learned that lesson the hard way as I'm trading pairs that had nothing to do with a major news event. And all of a sudden I see a big, 300 pip candle stop me out. So I just take a cautious approach. In today's event specifically, the market is undecided. We know that indecision, or I should say deviation from the expectation, is what typically causes the biggest moves in the market, right? So when the market expects something, when it says, hey, this is what we're going to get, and then the market or the news comes out and it gives us exactly what we expected, there's not too much of a move because that move was priced in well beforehand if it was super obvious. The big moves, like we saw with the August inflation news, right? The big news comes when there's a surprise. And the fact of the matter is that for today's interest rate hike, it's split. The anticipation is split, right? We have, I guess, half the market thinking, hey, we're going to go 75.75. We have another half thinking we're going to go a full point. So one party is going to be disappointed. So that's why I do expect some type of movement, because you're not going to get the market to agree, and therefore we'll see some type of reaction. So yeah, let me know what you guys want to look at. I'm going to pause and take a sip of my tea real quick, and then we'll get to a pair. If not, I'll choose one. We can even start with a follow-up. Well, we kind of already went over New Zealand yen yesterday, but yeah, let me know. Give me a second. I'm going to take a sip, and let me know if there's something you want to take a look at, and we'll head over there. All right, let's start here with New Zealand yen. This is going to be a recap for you guys in the live trading room. This will be new for you guys watching the live stream, so we'll keep it short and sweet today. What we're looking for here is a breakout on the New Zealand yen. You can see our notes are still on here from yesterday. I'll kind of recap everything we're doing. So what we already did was break out technically, right? You can see this first red line right here. This represents our previous structure highs. You can see this green candle right here. It's a little weird one because it was gappy, but we did have a break above and a close above. And based off yesterday's conversation with our rules for identify, predict, decide, execute, for our rules for what is a violation, when we get that violation of the highs, it allows us to predict that price action is likely to go higher. Now, what we've done is, after breaking out, a small breakout, not a really convincing one at all by any means, but what we've done after that is we've retraced right back down, really into the middle consolidation point of this consolidation pattern. You can see if I zoom in, that excuse me, that small white box right there, Nice little tight consolidation. Happens to line up with our zone, which is our highest volume zone of this range, right? So if you look at this entire range from the flagpole all the way up to the extremes right here, this little long spike with the red line in there, that shows us where the most volume was at. And for you guys that may be unfamiliar with volume, what does volume tell us? What would be another word for volume if we wanted to, I guess, convert it into something that is, I don't want to say a little bit more usable in our trading, but something that we would use on a regular basis. What does volume equal? What would you guys say? Volume. It is liquidity. Yep. It is interest, right? Volume is interest, right? And believe it or not, your highest volume levels are typically going to be your consolidative levels, right? Because if the market is just going up, that means there's a lot of interest by what party? If the market is going up, who has interest in the market? Sorry about that. I'll say if the market is going up, right? If the buyers are interested, there's typically not a lot of sellers, right? Because if the sellers were interested, the market wouldn't be going straight up. Vice versa, right? If we see the market go down in a straight directional move, we have a lot of interest by sellers, but probably not a lot by buyers. Because again, if there was a lot of buying interest, it wouldn't go down in that straight line. So in the levels where we have kind of this consolidation, and not all consolidation will be like this, but in the levels we have these consolidation, these battles, this contraction, I guess you could say, these are levels where typically buyers and sellers are interested, right? They are fighting each other for who's going to reign dominant. So you see those as being the highest volume levels. And just like support and resistance, right? Levels that had interest in the past typically will have interest in the future. So we're eyeballing this consolidation level right here as a level that we may see some type of battle. Now, biggest thing in the world, right? Just because we're IDing this level doesn't mean that price is going to turn around. I had a good conversation with a trader this morning. I put out a little YouTube short video talking about catching the falling knife. And we had a conversation about, you can't catch it all the time. And that's true. And that goes for anything in the market, right? You can't catch every falling knife. You can't take every double top. It's all about predicting and then waiting for a clue and then reacting, in my opinion, right? So what we're doing is we're not saying the market is going to reverse here, but we're saying, hey, if there's an area where we would expect those buyers to be interested again, right? Because the sellers have dominated on the way down, it would be in this area because this is where they were interested last, right? This was the last little consolidation before they pushed it up. So if price was cheap enough here before, it's probably cheap enough here again. Again, it's similar to going to the supermarket. I try to go on a regular basis, and I'm pretty legit at my shopping. I have a mapped out plan. I'm robotic. I go through each aisle like a Terminator, like a machine. But I have a pretty good idea of how price fluctuates for different items. So sometimes I'll go in the supermarket and I know if something is cheap or expensive. And for stuff that isn't a necessity, I typically only get it when it's cheap. So, for example, my kids like the little donut holes, right? Little round balls of sugar and dough. Oh, so delicious, right? But they're pretty expensive, right? And I don't like getting, because I'm not supposed to get them anyway, because I don't want to feed my kids all that sugar. But I know that once every blankety blank weeks, they go on sale. They hit a certain price. And when they hit a certain price, that's just the excuse I need to buy, right? So when I saw this price for the first time, it was good enough for me to buy. I know that when I see that price again, I'll have interest in buying again. The market is the same way. But we want to wait for our clues. This is why it's interesting what's going to happen today in the market, right? So far, we're putting in a little bit of a rejection candle at this previous level of structure support. It'll be interesting if we can get a rejection candle, get a follow through tomorrow with a positive bullish signal. And then that could be the reason that we use to get involved to the upside here. And we already talked about different targets, right? Tons of different target levels right here. One is, just a simple retest of our inside highs here. Second would be our most recent outside highs here. Third would be this nice little zone we have around 91s where we have our 127 Fibonacci extension. We got our AB equals CD pattern a little bit higher. And then we have this red line, which represents a previous level of structure resistance from the weekly. Real quick, TradingView says to note that if there are buying orders accumulated, that it will be a level with liquidity for institutions to go short. Yeah, that's what institutions need. That institutions need high liquidity levels to create their position. So that's why you see consolidation happen. We won't get into it too much, but when you guys see the market bounce back and forth like this in consolidation, and we did a good lesson. If you, Marius, if you want a chance, take a look at, what was it? This past week's Trading Edge video. I actually broke down a session from the live room we kind of did on how the market moves and why the market moves. Check that out. I think you'll like that. But yeah, or anybody, not just Marius. But yeah, we see those because institutions need to probe. They cannot put a position on all at once. So they have to be very sneaky with how they put their position on. They have to make sure they're right. So they've got to probe and test to make sure that the liquidity they need is present at those areas before they can get their full position on. And hopefully, 9 times out of 10, it does push the market in their favor. Real quick, Thomas Lau says, how do you read the volume price indicator on the side there? Easy. I'll make a simple version for you. And I'll give you a long story short. So I spent about a year and a half doing kind of like a dive into volume. And it's funny, right? Very good year and a half spent, right? Because I had previously, for years, I had neglected volume in the Forex market, right? Understand volume in the stock market, great. I neglected it in the Forex market because of the lack of central bank, right? So because there's no central bank in the Forex market, what we're getting as far as volume isn't actually a true volume, right? Because all the, it's going to be a volume based off your broker, which for me didn't sit that well because it's like having information, but not all the information. Like I don't like doing that in any aspect of life. I don't like having the information and knowing that the information isn't the full story. I kind of like, I want to see the full story. So I made all these videos and said that volume in Forex is pointless and blah, 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 blah. And what happened over the years is, since I've been involved in Forex, there have been a lot of brokers that have shut down and there's only a handful of brokers left. And because of that, you can look at volume from at least your major brokers. I wouldn't do it with any kind of minor ones, but you can look at volume for your major brokers as being a representation of what's happening with all brokers. So the actual number is not going to be legit, but it can still give you a clue because it should be similar across the board. Now, I did all that with the normal volume bars that you see at the bottom of your chart. What I didn't like about that was it just didn't mesh with the time frames I used, right? It would work well in day trading. However, I'm no longer day trading. I trust it on the daily, but I don't personally trade off the daily. With the time frames that I typically operate off of, which are the hourly and the 4-hour, it didn't really fulfill my need because volume is going to change. This is one of the gifts and the curse of the Forex market, right? One of the gifts of the Forex market is the 24-hour market. One of the curses of the Forex market is a 24-hour market. And we know that there are more popular and less popular sessions. Would you guys agree? Right? Is the interest in the Forex market steady for all 24 hours? Or is it kind of like, hey, London session, popular. New York session, popular. Asia session. Right? So with that being said, in general, the volume is going to be higher in what? Your London and your New York sessions in comparison to your Asia sessions, which doesn't play well into kind of measuring it equally. So I didn't really like that. So what I found at the very end in the last book I read was basically this horizontal volume indicator. And instead of having it on a candle by candle basis, it does it by a price point basis. So I said it would be long story short. It actually turned to a very long story. But long story short for the indicator, levels that have bigger spikes, so the spikes reach further right, these are going to be your higher volume levels. Levels that are smaller and that don't reach as far right, these are going to be your lower volume levels. So your higher volume levels will represent more interest. Your lower volume levels will represent less interest. And what you can do is you can measure it out per the specific zone that you want. So in this case, I want to take it from the start of the flagpole to the top of the consolidation, because I want to measure where within this zone did the most volume occur at. Another question. Hey, good day. Congrats on your work. I know you since Jason Stapleton. Stapleton. Glad to see you involved every day for the last many years. Thank you. Now, you're not the same. No, I'm looking at the picture. You're not the same Marius. Well, it's been a long time. I don't want to stalk your picture too hard. I used to work with another Marius very closely, a different one though. But yeah, thank you, man. Appreciate it. Thank you. All right. So that's a recap of our New Zealand yen trade. Again, went over all this yesterday, but want to do it again because we didn't do it on the live stream. Any questions about this before we move on? Again, we're going to stroll through markets. I have no idea what's going out there. I did zero pre-market analysis this morning out of protest, or no, just out of knowing what we have later. I made a comparison on Twitter of trying to do analysis before a major news event is like when I clean the room. When the kids go to school, I clean the living room, and I come home in the evening just to see that's messed up again. I have to question myself, like, did I actually clean it? Like it's like that. You just got to let it play out. Wait till the dust settles, and then do new analysis after that. So do you consider low volume nodes? I consider all of it. They don't necessarily they have importance, not necessarily for an entry reason, but it can have importance in as far as target projection and in where I'm looking for price to go to. So yeah. Look left, structure leaves clues. Yes, best line I was ever taught, ingrained. All right, YouTubers, trading viewers, I'm going to kick you off. I'll see you guys tomorrow. Same time, same place. Hit that like button on the way out. Leave any comments or questions if you came in late and I didn't have a chance to address them live. Live rumors. We'll start with euro dollar and just scroll on through. Stop me if everything looks delicious. If there's anything that comes up that you want